Hi everyone, this is a technical analysis on USDJPY. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected, with a shift in the statement that indicated the end of the tightening cycle. The summary of economic projections showed a downward revision to growth and core PC in 2024, while the unemployment rate was left unchanged. Moreover, the dot plot was revised to show three rate cuts in 2024 compared to just two in the last projection. Fetcher Powell didn't push back against the strong dovish pricing and even said that they are focused on not making the mistake of holding rates high for too long, which implies a rate cut coming soon. The US CPI this week came in line with expectations, with the disinflationary progress continuing steady. This was also confirmed by the US PPI the day after, where the data missed estimates. The labor market has been showing signs of weakening, but we got some strong releases recently with the US jobless claims and the NFP coming in strongly. The latest ISM manufacturing PMI missed expectations, falling further into contraction, while the SM services PMI beat a forecast holding on in expansion. The market expects the Fed to start cutting rates in Q1 2024. In Japan, the BOJ kept its monetary policy basically unchanged at the last meeting, but formally widened the yield curve control to 1% on the 10-year JGBs, stating that it will be a reference cap. Governor Ueda repeated once again that they won't hesitate to take easy measures if needed, and that they are not foreseeing sustainable price increases. The latest Japanese CPI showed that inflationary pressures are easing, although they remain well above the BOJ's 2% target. The latest unemployment rate remained unchanged near cycle lows. The Japanese manufacturing PMI fell further into contraction, but the services PMI ticked higher, remaining in expansion. The latest Japanese wage data beat expectations, and as a reminder, the BOJ is focusing on wage growth to decide whether to tweak its monetary policy. BOJ Governor Ueda last week delivered some interesting comments, where it looked like the central bank was indeed considering rate hikes in 2024. The market expects the BOJ to hike rates in Q2 2024. Now on the daily chart, we can see that USD/JPY pulled back into the blue 8 moving average here following the sell-off caused by BOJ Governor Ueda's comments. The sellers lent on the moving average to position for new lows as the market continued to price in rate cuts for the Fed in 2024. In a surprise move, the Fed came out much more dovish than expected and triggered another big sell-off in the pair, with the price reaching the previous lows. The target for the sellers continues to be the swing low at the 138 handle. On the 4-hour chart, we can see that the pullback from Ueda's comments got rejected around the strong resistance zone here, where we had the confluence of the trend line and the previous swing low level. After a small bounce on the key 145 handle, the price tumbled as soon as the pair broke below the level, as the sellers piled in aggressively following the more dovish than expected Fed. The pair is now consolidating around the lows as the US data yesterday came out much better than expected, with strong retail sales and jobless claims. On the 1-hour chart, we can see that the pair is trading inside this rising channel, which might turn into a bearish flag if the price breaks below the lower bound of the channel. The sellers now will have two options. The first, selling at the upper bound of the channel, where we have also the 38.2% Fibonacci retracement level for confluence, or selling on the break below the lower bound of the channel. The buyers, on the other hand, will want to see the price breaking above the 38.2% Fibonacci retracement level to position for a rally all the way back to the trend line around the 145 handle. Today, the only notable event on the agenda will be the release of the US PMIs.